Hey, what's up, YouTube? Colin from the Investor Channel here. Going to walk you through reading Apple's 10K. So, if you don't know where to find these, not super hard. I will have a link to this in the show description right underneath this video. But you want to find the company's website. Often search for investor relations. Find SEC filings or financial information. They're likely kind of in both categories. You want to look for these 10K documents. This is if you're looking for the annual report. You can also do sometimes filters here. Also, oftentimes when you're running through these 10K annual reports, you might want to look at 2018 or in Apple's case, all the way all back to 1984. So I bet they're quite a bit different. And the numbers and things have changed quite a bit for Apple. But what hasn't changed is reporting annual reports and kind of going through them and reading them. And so that's what we're going to do here. So here we go, Form 10K. I'm going to zoom this in just a little bit. There we go. That looks good to me. So Form 10K, first page, pretty standard. Here's their zip code. It's not too far from me, actually. Some interesting things sometimes creep onto this first page. And in my opinion, that's market cap value usually towards the end, or it kind of spills onto a second page sometimes. So it says aggregate market value, and that's this amount right here. Look at that. Guys, that's $828 billion. That'd be a lot of money in your pocket. You could buy a lot of cheeseburgers with that money, or you could buy Apple computer. And that's how much the company was worth. That's based on this many shares outstanding. If you wanted to do a comparison, you could go back to, again, you could come back here and say, geez, I wonder how many shares Apple had back in the year 2000. Well, you could figure that out because it'd be on the bottom of the 10K there. You could also see the approximate market cap of Apple as well. I bet it wasn't quite $828 billion. And if you knew that back then, you would have bought all the shares you possibly could. Once you know where you're going in these documents, might be that you're looking for risk factors or legal proceedings or selected financial data. I will say, if you're looking for financial data, likely you're going to look for these quarterly reports. Okay, you're going to come to these. Again, this is dated August 1st. This 10K, I think, was put out in November. Sometimes you might want to go to the annual report, but if you're looking for the latest and greatest numbers, you can kind of come here. And again, on a quarterly basis, these annual reports are exactly what they say. They're giving it to you kind of on a yearly basis. Now, what's awesome about 10K reports is they overview this business. Often, very first thing you'll see in a 10K, outside of what I just outlined, is this overview of the business. And with Apple, even if you're a Samsung user or you're still using your BlackBerry and your Nokia, chances are you probably know what the heck's going on with Apple. But what is kind of cool is if you don't, imagine if this was like a software company that you'd never even heard of. What if this was a marijuana company or in a sector that you really didn't know about? Maybe you have a boss that is like, hey, go research this oil and gas company, and you don't know anything about oil and gas other than you put 89 octane in your 1997 Honda Civic. Well, here you go. This is going to outline it. Look, we got Apple TV, AirPods, HomePods. We got iPhones and iMacs and iPads. This is their strategy. They talk about it. Obviously, we know in general kind of what Apple's doing. Talk about their products. We know about, their products. But again, this is with a company that we really know. But maybe you're a Google user and you don't know that. You're aware of the iPhone and maybe you've tried it out, but you don't know about the TV. You don't know about the services and how that revenue. You don't know what iCloud is. You don't know what Apple Care is, Apple Pay. All these things you might not be aware of. Okay. Then we go into the developer programs, which certainly support all the products that I just went over. Markets and distribution. Again, we're relatively aware of this. This isn't standardized from company to company. Some companies might have not even gone to market yet, or they don't have any distribution, or they're working on it. That'd be something you definitely want to read about. But obviously with Apple, gosh, they have a lot of markets and distribution. So this is a fairly lengthy segment. One interesting segment that often makes its way into the Qs, the 10Qs, the quarterly reports, and the annual reports is is a single customer kind of dominating the company? Like, is it like supporting? And it's, I think this 10% might be an SEC number, it might be an arbitrary number. I'm not exactly sure, but pretty sure the SEC requires companies, since I see this a lot, no single customer accounted for more than 10% of net sales. Why is this important? Because we've seen in the past companies, off the top of my head, like Under Armour, when Sports Authority went bankrupt, Under Armour was a large percentage of Sports Authority was a large percentage of Under Armour's sales, and so it affected them. It affected a lot of people in the business, Nike is included. Lots of brands felt that. But as we see, since Apple kind of controls their entire supply chain, it's actually kind of hard for like a Best Buy or Amazon or something like that to be a big quote unquote customer, somebody that sells a lot of their products. It's because Apple kind of controls a lot of that. It's kind of interesting. Competition right here. Oftentimes you see this in the Qs. And actually, you see it in the 10Ks. You don't really see this in the Qs unless they're referring to maybe a very specific situation. One thing I don't see here is the mention of something like Samsung. Some companies that I've gone through on these, what I really like about the competition segment is sometimes you can pick up, like, for example, maybe you're looking into one of these hot, quote unquote, hot marijuana stocks or whatever, something like that. And you want to know, well, who else is in this? You know, who else is growing buds? Who else is selling cell phones? Who else is in this business? Companies often break it out by name. Apple doesn't do it here in competition. Might be a little bit of a snotty thing, or they don't want to even like acknowledge Samsung as a competitor, or maybe that's their closest competitor on the phone side. But they've got lots of competitors on the computer side and the device side, for the Apple Watch, on the TV side, on the software side. They've got a lot of competitors. And I think they should list them here, but they don't. But something you should be aware of as you go through these documents, don't think, oh, I'm going to go read Apple's 10K and know everything about the company and be an expert. You really need to read these and use these as kind of a launching pad, actually. Recognize that Apple isn't specific enough here in this competition. That means it's for you to go and investigate that, since Apple doesn't do a very good job here. Supply of components, very interesting. This could probably be far more lengthy, because think about all the little components that go into all Apple's devices, and they've been known to delay products or put products off or have problems with products, and it's all about the components and things inside. Research and development, we'll see later, this is a huge expense in terms of money that Apple outlays. Intellectual property, something very important to the company, obviously. Maybe not quite as important as brand at this point. Think about how many phones are comparable, maybe even better than Apple products on the computer side and the iPad side, but the brand is so strong that intellectual property maybe not quite as important as it once was, or for maybe other companies or other industries. Another thing you could think about as you're running through these 10Ks, these thoughts really should start be rolling through your head. I think that's what's I love going through these documents, is it gets these thoughts going through my head, like, hey, intellectual property is really important, but hey, when you got a huge brand, that might be even more important. Going through here, they got, some of this stuff really important. I love this. Employees, look at this, 132,000. A lot of you probably don't even live in cities that have 132,000. I don't think I do, actually. And I'm glad I don't. I used to live in much bigger cities. Gosh, that's a lot of people. One thing I could think about here, I know Apple's kind of, their stock is kind of fluctuating. It's down a little bit, as a lot of stocks are, but it's down off its highs. Well, here's a great way to shed some dead weight right here. 132,000 employees. I don't think a company of any size necessarily needs that many employees, but we'll see. Moving on, risk factors. Love this. Marijuana stocks would be really entertaining to go through. Maybe that's You can shoot me a suggestion down below as you're watching this, what kind of company or what specific company you want me to look into next. I got to think maybe those marijuana stocks are next. It'd be an interesting read on the risk factors here. With Apple, quite a bit. You probably definitely want to read through these, especially if you're like an Apple fanboy and you love the phones and the iPads. As hey, I'm doing this on an Apple computer right now, and I've got the Apple phone and the iPads and all this other stuff. But you got to put that off to the side and really recognize this. This is an investment. You're buying the stock, not a phone here. Your goal of buying the stock is for have it to go up, and it has really nothing to do with the phone in your pocket. A lot of great companies that have bad stocks, a lot of bad companies that have good stocks. Not saying where Apple is, but these risk factors will get some of those thoughts going through your head. Some of these things, this is like cut and paste probably off the SEC website. It just has to be in here, of course, subject to volatility. We're seeing that actually in the current time. Properties like this, they're located in Cupertino, California, one of the most prime real estate areas in Northern California in terms of, really, I would say like commercial real estate. Really nice places to live there, but gosh, I'd rather live in Monterey or Los Angeles even maybe. But look at this, 16 million square feet. That's pretty good. And they lease that many square feet. 7,000 acres of land. So some real investments here. Again, not really super important with Apple, but maybe this is a smaller company. Imagine this is Apple 10, 15, 20 years ago. Well, hey, owning 16 million square feet of something and 7,000 acres of land. We just saw Sears go bankrupt, or they were in bankruptcy or something. And hey, I guarantee you a lot of the value is right here in a company like that. Not saying that's going to happen to Apple, but if you're analyzing small companies, here's some, something that will put a small cushion under the stock. Not that that's really something you want to invest in, but here's what you're really going to start investing in is Apple's actually buying their own stock. This is actually kind of interesting. I'm going to go ahead and show you something here, actually. I wanted to bring up Apple's current stock price. So we're going to bring up Apple's stock price here. Apple stock price, $156. Seen over the last year, especially the last couple months, it was up at $200 or so. Reason why I did that was, reason why I took a second to bring up Apple's current stock. Look at this, 23,000 shareholders of record. That's a lot. Okay, you look on some other companies, it's a lot lower than this. So purchase of equity share securities, basically a buyback program. Company explains it here. They have $100 billion with a B buyback program, and they've used $29 billion of it here. I want you to show you the average price: $192, $214, $222. Total numbers of shares: 92,000 shares. Imagine if you open up your E-Trade account and 92,000 shares of Apple sitting in there. Probably feel pretty good about that. Look at these prices, guys. 222, 214, 192. What's Apple at today? 156. Yes, buybacks are good. We'll show in a minute how they can boost earnings per share. They can actually lower the dividend commitment so companies can maybe pay out a little bit more per share. Kind of getting into the weeds there a little bit, but guys, most companies I know are really good at making phones or growing marijuana or advertising on TV, whatever it might be. They're not good at buying their own stock, and Apple is no different. 222, 214, 192. The stock's at 156. Guys, buybacks are awesome, but in my opinion, not a huge reason to buy the stock. Does it help the stock? Sure. But usually, in my opinion, often a waste of money. Apple should have just given this money to shareholders. Much prefer a dividend than a buyback, in my opinion. But hey, here we are. company stock performance. So maybe I don't even know what I'm talking about. Because look at this. Over the last 5 years, Apple Computer, this dark black line, has outperformed the S&P, the Dow Jones, and this IT index. If you get $100 in Apple Computer back in September 2013, be worth $359. That's a triple up. Not that you'd be doing really terribly. S&P 500 index, the S&P Information Technology, and Dow Jones all up about 100%, 200% in most cases. Guys, this is why you're watching a YouTube video. Give yourself a pat on the back that you're trying to learn this stuff, because look at how you can grow your money right here. $100 into $359. I know $100 is not a lot. Maybe it's a lot of money to you right now. It's a lot of money to me. But over time, start putting zeros behind this. Instead of buying $100 worth of Apple, you buy $10,000 worth. Now we've got real cash to start playing with and going to Hawaii, first class trips. That's what you hope for. In retirement, hopefully. Selected financial data. Always great to see this. Look at net sales. What I love about annual reports is they show it to you year over year over year over year. Can a company have a bad year? Yes. Can a company make a bad product? Yes. Can a company have a really good product and a real successful product, and then it fall out of favor or fall out of fashion? Of course. See it all the time. Probably is more common than hitting home run after home run. Here we go with Apple. Have we had consistent increases? No. Look, back in 2015, we had 233, and then we dipped, and then we didn't even eclipse it in 2017. But we had a re-acceleration this year, likely due to price increases here. Net income, again, not accelerating, but moving up in the same trend line as sales. Here's where the buyback, here's where the share buyback, what I was talking about a few slides ago, earnings per share, okay, per share. If the company is buying back shares and retiring them, and we'll see that here. Look back in 2014, how many basic shares were outstanding? It's this number. Look how many there are today. Look at this. So there's less shares out there. That means the earnings per share likely going to trend up, even if this number has trended up, and we like to see this. But in some cases, you might be looking at a company and you'd be like, oh, wow, look at the earnings per share. It's gone up. But wait, income is not any higher. It's just that they've bought back and retired shares. Another key factor here, as an investor, a buy and hold investor, look at the dividend per share. $1.82 to $2.72. Now you could do the math on this. $1.82 times this number gives you how much Apple has to pay out in dividends. You might as well just go to this diluted number. $1.82 times this equals the dividend they have to pay out. Now look at this. 272, is it higher than 182? Yes. But look, they've got 5 million shares as opposed to 6.1 million. So has the dividend gone up? Yes. But the number of shares outstanding gone down. So that's, to me, that's the rub about buybacks. Have I seen a company perfectly time and buy their shares at a good price? No. Usually they buy it too high. But if the company pays a dividend, what it does allow is for less payout on a yearly basis. But as a holder of the stock, I'm not selling. I'm not retiring my shares and selling them. My dividend is going up. So in those cases, Nike is in this category, I believe. Apple's in this category. There's probably actually a lot of stocks I just don't hold. I mean, I hold a decent amount of individual stocks. I'm probably up to 25 or 30 now. That's probably too many. But it's not that many. Okay. But there's a lot of companies out there in the same kind of financial situation. So just wanted to point that out to you here. Love this. Love this This is really high level. Let me tell you what, if you're watching this YouTube video and you're just kind of starting out and you're just kind of new, maybe you're a young business student or you're just kind of developing your skills, this start with this instead of a really detailed financial sheet and balance sheet and all this other stuff that sometimes has terms and maybe terminology that you don't understand or not experience enough to really know. Start with this, okay? Start with just net sales, net profit. How many shares do we have? How much dividends are going out the door for those shares? How many shares are they, and what's the trend of that like? Then we come down here to total cash. Look at this, 155. I think this is this might be in millions, because I'm pretty sure this is 273 billion. This whole section is probably in. They don't really say it here. They probably should say. It might say it up here, in millions. Here it is. Sorry, in millions. So this is, guys. These are huge numbers. This is two accepted numbers of shares. Okay. This right here, not in millions. These are actual numbers, 5 million, 6 million. This is billion. 230, not 200. Okay, it'd be awesome, guys, to have $237,000 in cash. Be awesome to have $237 million in cash. Apple has $237 billion in cash. And we can see the trend of that over the last few years. Debt on the company's books. Look at this. Interesting. Company with $200 billion in cash has $93 billion in debt. Part of that is to do this and this. Not that we need to really explain that in a lot of detail, but I'll point out in a minute why that's not really something I'm too concerned about right now. Other companies, though, let me go back, rewind. Other companies, if I'm looking at debt and I've seen they've gone from 28 to 93, this is huge alarm bells right here, guys. If you're looking at another company, not named Apple, that has gone from $28 billion in debt to over $93 billion in debt. Even if this is $93,000, if it's like a really small business, maybe it's your own business, your own home business. If you've gone from 28 to 93,000 in debt, you need to start pumping the brakes. Okay, unless your cash pile has gone from 155 to 237 at the same time, then maybe not. It's all relative. It's all in context. That's why we're going through this exercise, really getting you familiar with this. Here's all what we just read here. Again, I said go over this. This is something that should be kind of a layup wise for you to analyze. And again, if you're a young investor, don't worry if some of this stuff I'm going too fast or it's confusing you. That's why you're going through this, okay? If you're just learning how to play golf, you're not going to tee it up at the Masters next year. But if you practice a little bit, not that you'll ever make it to the Masters, but maybe you'll get good enough to where you can get invited to the Masters as a guest. But if you're some hack, that's never going to happen. So one step at a time. You're not going to hit the ball as far as Tiger Woods, but if you keep practicing, you might. More sales data broken down. Again, we have the total net sales, but here we're seeing it in America, Europe, China. A lot of talk about China. China's gone from 48 to 44 to 51. Still, I'm sure this is where all the growth can potentially happen, but we've seen it's not been really super explosive growth. The growth in America is still what's driving this company. We see net sales by product. Here's something also that you should be able to analyze when you're looking at this. Something that really should stand out to you is say, hey, look at this iPhone. Went up 3% this year, but look at this 18%. That's actually pretty good. That's a lot over 18. What happened? Look at this. iPhone sales. This is unit sales. They were the same. So what did Apple do? They raised the price. Okay? This is proof that, oh, look, they can charge more for their products. Some companies can't do this. Some companies raise their sneaker prices up where Nikes are, and then they can't sell them anymore. Some companies raise their TVs or their phone prices up where Apple's is, or their watch device up where Apple's is, like Fitbit, and they can't sell them. They got to lower them. Okay? Apple can raise their price. We see all their products broken out here from a dollar perspective. And I think this is going away. I think this is one thing Apple announced, that this data right here is going away. They're not going to tell you how many units anymore. Not something I really like, but something they're doing. This shows you a percentage. So net sales of iPhone, 63% of sales. So if you didn't want to bust out your calculator and figure out this yourself, they show it to you here. Show it to you in a trend as well, which is cool. iPad we see is declining. Mac, steady. Services business, this is all like Apple Pay and all that other stuff, going up. Look at this. It's nice. Segment performance, again, we're seeing America, seeing Europe here. Love these trends, okay? You're just seeing right now, for me, this is like showing me Apple's steady. I know their stock price has done this, but this is steady. For me, it's like, I don't know. From a stock analysis perspective, if I wasn't in Apple and I thought about getting in at 220 or 200 and now it's at 156, sure, might buy a couple shares. As somebody that, I think Apple's like number 2 or number 1. It's number 1 or number 2 in my portfolio in terms of dollar value. And I own broad market funds, so S&P 500 funds, which are going to be quite a bit of Apple as well. So do I really want to add to it? Not really. I'm not really seeing like these huge growth numbers, anything I'm really getting excited about here. But am I selling my shares? Absolutely not. I didn't buy them up here at 220. I'm probably back here in the 90s. Back here in this area is when I probably accumulated the vast majority of my shares, as I'm someone young. If you're a little bit older than me, you might have been lucky back in here. And then it's like, who cares? It's gone from 220 down to 150. You bought it at 28. So that just shows you buy and hold, guys. Great strategy. And it starts with analyzing these financials. Gross margins, love this. Look at this. Look at these margins. Steady. 38%. Gosh. These aren't net margins, but gross margins. 38%. Company this size. And this mature. Their iPhone business is mature. Because as we've seen, iPhone business is mature. How do we know this? Look at this. Look at sales. Unit sales. This number is flat, completely flatline. iPad business, mature. Mac business, we know. Desktop computer business, mature. But still chunking out 38% margins. It's pretty darn good, guys. Research and development, operating expenses. Now we get down to the, kind of the nitty gritty here. Look at this research and development. This is in millions, guys. $10,000, a lot of money. 10 million, a lot of money. 10 billion, even more. Spent on research and development. But it's holds steady at 5% of sales. Yes, it's gone up. But what have they released? Literally, like, what has Apple really done the last 2 years? Yeah, they've released some stuff, and I really liked headphones, the little iPod things, the headphone things that they've come out with, and I don't have any of the new phones, but iPad Pro's pretty nice. I like that. But, man, they're spending a lot on research and development. I'm not seeing a lot come out of this company. Might explain that right there. But anyways, everything's holding steady here. We're in a holding pattern with Apple, and these financials really kind of illustrate that. More expenses, property taxes, income taxes. Important thing here. Look at this. Income taxes, 25%, 24%, 18%. This is in millions, guys. This is in 13,000 or 13 million. This is 13 billion, I believe. Jobs Act, tax cuts. Okay, guys, Donald Trump, does he tweet some silly stuff? Does he say some silly stuff? Does he do some good stuff? I don't know. I don't really care. Let me tell you what also doesn't care. Money. Money doesn't care what Donald Trump tweets or what he doesn't. Money doesn't care who the president is of the United States. Money cares if you're getting charged a 25% tax rate in 2016 and 2017, and all of a sudden it goes down to 18%. Here it is, December 27th. Tax cut, Jobs Act. This is Donald Trump's tax cut right here. Right here. Shown to you right here. Literally $2 billion less in taxes. So, guys, I don't care who's president. I don't care what they tweet. This is a good thing for my wallet and my investments. So, does it outweigh other bad things? I'll let you decide. But again, money does not care who the president is or what they say or what they don't say. If they cut taxes this much, this is a big cut, guys. It's a lot. Leases. This is kind of some of the nitty-gritty stuff. Income taxes, leases, hedging, I don't know. If you really want to get down into it, you can. Liquidity, capital resources. Don't super gotta be really concerned. I don't think about Apple's liquidity because they have this much in cash. It's $237 billion. Commercial paper, debt. Look at that. This to me would bring up red flags for most companies, but you have this massive cushion of this massive amount of cash. I'm not super worried about this. All this right here is in words, basically. So they're taking this financial data and kind of breaking it down here and giving you a sentence or two explanation. I love this. If you're confused about something, if you're like, commercial paper, the hell's that? They'll talk about it down here. Okay, that's what I love. Debt. Another thing I love, look at this. With a weighted average of 2.8%, 2.18%. Guys, inflation is at 2%, just call it 2% every year. Your money goes down, US dollar I'm referring to here, goes down in value 2%. Or everything else gets more expensive by 2%, however you want to look at it. Apple is borrowing at 2%. That means that essentially, in my opinion, that's free. Free money. That's another reason why this debt would not concern me. Now let's cut this number in half, okay? Let's just Apple loses $100 billion and they just lose it on the street. It gets lit on fire, or they lose a big court judgment or something and have to pay it out or something. Or Donald Trump orders them to pay $100 billion and they do. Or really some Democrat wants them to pay $100 billion to pay for health care for a bunch of people that don't want to work. So let's just assume this is $100 billion and they have $100 billion bet. I'd be a little more worried. I'd be saying, oh, what's going on here? Got a lot of debt. This cash pile is going down. But I'd say, wait a second. What's their interest rate on that debt? Can they cover it? Guys, at 2%, that's nothing to get concerned about. I know this is on $12 billion, but you can generally probably assume Apple borrowed at really, really, really low rates. Okay. Capital return program. This is probably dividend. Talking about dividend. This is obviously really important if you're a buy and hold investor. Contractual obligations. Look at this. We got leases and debt and purchase obligations. These obligations are non-cancelable. So this is real money here. But look at this. We've got 19. They show it to you. They give you kind of a future view on these. Okay. All the way to 2023. And then they give you a total. 199, guys. 199 billion. Remember, Apple has how much in cash? 237. Another reason why not to worry about any kind of debt level. Again, debt, traditional finance, personal finance especially. Oh my God, you have so much debt. Oh my God, you have $100 billion in debt. You're crazy. Not in this case. I'm showing you a case. This is what's great about a great example, and I'm glad you're watching this video. This is an example of where debt is very, very, very manageable for this company. Extremely manageable, especially at a rate like this or anywhere around this, even plus 4 points on this. Very much manageable. Then you also look at what's the total obligation of the company? It's $199. They could pay off all obligations, still have $40 billion, which is much more than 99% of companies out there. Awesome, awesome stuff there. More stuff. Some of this stuff has to be in here for SEC purposes. Some of this stuff's a little more entertaining to walk through when it's kind of a newer. Again, Apple's really mature. And so some of this might be more exciting again if you go through on a kind of a up. I think for me it's like marijuana companies come to mind. You know, it's a business that's not young at all by any means. People have been growing weed for a long time, but it's new from an investment standpoint in terms of the public market. Again, more talking about this tax law, which is a big deal. You know, big deal for this company. Big deal for a lot of companies. From a dollar perspective, is it a big deal for Apple? It went from a 35 to a 21% rate. You know, $1 billion or $2 not going to, you know, make or break Apple's day, but for some companies that's a lot. Okay, a 14% difference is a lot. Could be the difference between breaking even and making a profit, or losing money and breaking even, which is even more important to do. More legal stuff might be really interesting for some companies, not so much here. They talk about interest rate here. Again, if you considering how much debt this company has, something you want to look into. If there weren't so many other kind of, I would call them maybe green flags that cancel out a red flag of a lot of debt or rising debt, you definitely want to investigate how much interest rate risk and how much interest rate companies are paying on that amount of debt. And they really break it down here. It's kind of interesting. But we're talking about, you know, I know $400 million is a lot of money, but to Apple, not really. Currency risk. And as we kind of move through this, we start cycling through some of the stuff we'd already have seen before. And once you've kind of broken through that, you know you've kind of cycled through the vast majority of the 10K. And so I'll take a pause here and kind of recap for you guys. You going through these 10Ks. What I want you to do, if you're a new investor, kind of somebody just trying to get the understanding of, you know, understanding companies' balance sheets and financial documents and things like that, go to these 10Ks, the annual reports, because the financial statements are consolidated, as they say here. Much more simple to understand, flow much nicer. You should be able to put the dots together much better through a consolidated statement of operations as this is here. So we have sales, and we're seeing it year over year, which I love. Because again, a company like Apple, if you're looking at their second quarter numbers, well, they might be at the tail end of a phone release, and maybe in 2 months they're coming out with a new phone. So all customers are just waiting. So those numbers are really only good to a certain degree. This gives you year over year over year. We got the gross margins. We've got expenses here from a total. Look at this, total operating expenses. Look at these numbers. Look at these numbers, and then look at this. It's just incredible, absolutely incredible. And then we look at how much net income is driven out of it. That's really strong, really strong. Earnings per share, again, we went over this. They're reducing their share count, so naturally this number is going to go up, even if these numbers are trending up. So it's kind of a double whammy. You're like, oh, wow, earnings per share has gone up $4 a share. Well, a little bit of it's due to sales, but more of it really is the reduction of the share count. And that costs the company money. Wasn't like this was free to get this, okay? It actually cost the company money. They could have bought a lot of companies, some very well-known companies. For as much as they bought back their own stock, they could have bought someone else's stock. So that's something to keep in mind with those buybacks. Again, they show it to you here. Here's the trend of the share count just over the last couple years. Here's more from an income perspective, kind of breaking out different things, getting more down to a comprehensive net income kind of number. More assets here, balance sheet. This is just a year-over-year basis instead of kind of a 2 or 3 year look. We're getting a year-over-year look here. We can see total assets, total liabilities. Again, wow, look at that. Total assets, total liabilities. Guys, that is a wide gap when this data is in millions. Again, this is not in thousands, this is in millions. It's an extraordinarily large gap between total liabilities and total assets. And that's exactly what you want to see if you're an investor. And again, we're going to get further into more and more, I wouldn't say complex financial documents, but financial documents that are probably better suited when you go over to these Qs. Probably when you're looking at these, some of these net income. Again, we're seeing it here from a yearly basis, but in some cases you might want to look, okay, before a big release, what's their revenue? What's their revenue like 2 quarters after a big iPhone release or 2 quarters after an iPad release, things like that. You might want to jump over to these Qs and get kind of, dig out that data and things like that. Inventories, they show it to you here. Now we're getting into, again, you want to start looking at some of these expenses more in detail. Here's cash paid on interest. Kind of cool stuff here. And again, we're going to go back over some of this stuff in English, basically. They're going over the numbers in English. But again, we're repeating a lot of the same information. So I'm going to stop there. As these 10Ks happen to do, there's only so many times you can show earnings per share, but these companies do figure out a way to do it. So I hope you enjoyed today's video. Hit the subscribe button if you like this. I am currently making $0.00 for posting these videos, so I'd appreciate it if you subscribe. Let me know how I'm doing. Let me know a company you want me to go over. Any questions you might have. I will have a compilation video here shortly of kind of questions that I've received, so get those in the comments below, and I'll be sure to go over those again on a future video. But today we went over Apple's 10K. Hopefully you've enjoyed it. Sit back and relax the rest of the day. You've really done a good thing here for your financial literacy and probably your wallet down the road. So thanks for watching. See you guys later.